So those who watch this video, I would like to ask this question at the start. Have you set sight on becoming chartered accountant in 2023? I am sure answer has to be yes. If so, this talk about SL1 syllabus changes that's going to be effective from Jan 23 will be very important. So what is the big change? What is behind this curriculum change? As you know, SL1 is a very rich subject that enables you to get into the boardroom, to contribute to organization strategies, to tell the story beyond numbers, all of that. So there are just three big points about this syllabus change. The first one is the CFO's perspective to the subject. Because earlier there was a misconception that, okay, there is auditing part in the syllabus. Even originally it was not supposed to be auditing, but now there is very clear clarity that this is one subject, and I will explain to you during next 5-10 minutes that connectivity. How do you connect financial statements with the holistic business process in terms of strategizing and value creation? So the first one is the CFO's perspective, and then there is no audit procedures that are going to be tested in the exam. You can comfortably forget about big auditing standard book. The auditing standard, reference to many auditing standards have been removed. Having said that, we need to carefully understand when you prepare to sit for this examination with this revision, how should you understand this big change in very simple manner? That's what we are going to do during next 10 minutes. So the first thing that I would like to tell you is that ABR, as the name says, is not AFR, Advanced Business Reporting. It allows you to tell the full story or the complete story of the business. What does it mean? Now see the first point here. How do you read behind numbers? The revenue figure is there, receivable is there. What is behind that? Are you able to explain the risk behind numbers? So the risk is a bigger component. So every organization has a risk management process, and this is a beautiful subject that connects numbers and risk. And then every organization has to earn. The performance dimension is about management, making money. Then there is conformance. What is conformance? You can't make money at any cost. There is an accepted framework of money making. If you violate laws and make money, or if you get maximum out of, without paying for your employees, if you are trying to make money, that is unacceptable. So the framework for money making, who monitors money making process, and that is governance. So this word performance versus conformance is a big concept in governance. So the governance part is a bigger part in this curriculum. So especially the way that you look at risk has changed with these changes. The other important aspect is connectivity. So the connectivity is about how do you connect dots. So that is where non-financial reporting, it can be integrated reporting, it can be GRI framework, it can be sustainable development goals. So various this non-financial reporting framework have become much popular today. Therefore, the subject enables you to connect the dot. So that connectivity is brought in through non-financial reporting. And that right way of doing the business is about ethics. So out of these components, the risk element has changed. Before I go there, I would like to remind you that this subject brings rich content of corporate governance. For those who want to learn corporate governance simply by memorizing the corporate governance code, That is not the way. The real corporate governance is a real adult study to understand the dynamics in boardroom, what's going on in the boardroom, right? What are the roles of board of directors? How do you critically evaluate the governance processes of an organization? So when you learn this subject, you will get to see very powerful models of corporate governance. For example, what you see on the screen is a very powerful articulation of governance by famous author Bob Tricker. And you will wonder when you start learning this subject, the real corporate governance, the way it has been practiced internationally, that you will be a person who could potentially advise board of directors. Now you see here, there is a triangle. So that is management. So management main purpose is to run the business. And then there is a circle which is superinforce. Right? Now what is that circle? So that circle you can see there are dots right around. And inside there is an overlap between the triangle and the circle. You can see some directors there. Now what you can probably use in this analogy means there is a triangle and the circle. The circle is about the governing role of the board. And if I now ask you, can you explain 4 bigger roles of the board? Now those are not typically there to find out in corporate governance code. When you learn advanced corporate governance, right, the way it is being practiced, you will see that the board has to formulate organization strategy or to play an active role in strategy formulation. That is more futuristic. So that strategy has to be executed within a policy framework. That's the policy making task of the board. And on a regular basis, why the circle is coming superinforce, right, on the triangle is that the board will watch, monitor whether management is managing the company in the way they are supposed to manage. And then finally, the board has to be answerable, right? So that's different perspective of corporate governance. The one perspective is that they are stewardship, right? So they are accountable. Now you see during last 3 minutes, I spoke 4 things, 4 big roles. Strategy formulation, policy making, more of futuristic tasks, and then on a day-to-day basis, board of directors are monitoring and they are going to be accountable. So the strategy formulation, policy making, monitoring, accountability. So these are the 4 bigger roles of the board. Now when you learn SL1 real corporate governance, you need to really unearth these learning outcomes. These are learning outcomes in the syllabus. I want to reiterate that. And then let us look at the most critical changes coming through these syllabus changes, which Institute has already published that. So what does this mean to you? So I have taken 3 critical learning outcomes that you can see on the screen, and I have highlighted few words. Now you see 3.11. At strategic level, this word, usually we don't use this demonstrate. Demonstrate is not a very complex, so to speak, action verb. Demonstrate is a basic understanding. You can see demonstrate in 2 places, but the last one you can see the action verb is at very high order one at a strategic level. Evaluate. Now which means there are 2. If you look at in this table, the first 2 it talks about, we'll take the first one. Demonstrate the meaning of risk of misstatement. And remember in the syllabus, there is a last column that tells you what you are supposed to know. If I am an examiner setting a paper, that this is my key document, the syllabus. And you need to really understand before you study, what does this mean to you? So you are supposed to explain risk of misstatement using the concept. Look at the right side, the last column. Concept of inherent and control risk. You need to have a very good understanding, like a story by looking at a balance sheet that why there is an inherent risk in investment property, why there is an inherent risk in this intangible, you should be able to explain in the right language. And look at the next one, 3.2.1, the assertion. The most powerful one of the word in this paper again is assertions. So there you need to really look at, again this says demonstrate the use of assertions by management in preparing financial statement. Now some of you will wonder what assertion means. Assertion means one powerful word. The way management represent financial statement. Revenue is 100 million. How do we know this 100 million is complete, accurate and so on? Now that assertion, you can use this concept of assertion to evaluate misstatement in financial statement. How you can use assertion to explain how accounting standards are used to recognize, measure, right? To recognize, measure and disclosure. In that process, there can be misstatements. So I'm going to explain that part also in 5 minutes. Then you will understand that it's so easy if you really understand that point. And then final one is real, business. Again, I want your careful attention. You read that. Actually, this slide captures the most critical changes, right? The next one says how significant business risk. For example, now as we speak, there is a crisis going in the country as well as globally. That's a significant business risk. Can it affect my property, plant and equipment valuation assertion? Because I have closed down one business line. So that is a risk to me. It is there in company's risk register in enterprise risk management, and now it's going to affect my balance sheet. Now look at the right side of the table. It says connectivity between business risk that I spoke about, now economic crisis, and then how my balance sheet is going to be affected. And with this crisis, there is naturally a pressure for the management to manipulate. That is where fraud risk factors comes. Now you see how important, if you really understand this, the learning becomes much easier. So, the cap cover, what is cap cover? You will wonder what cap cover means. Those are assertions. So see, completeness, accuracy, presentation, cutoff, occurrence, valuation, existence, right and obligation. This is like a game. You will see how accounting standards can be audited using assertion. Right? How accounting standards can be evaluated from risk perspective using assertion. So that's what you will learn. So it's about the story behind numbers. So now see, I want during next 3 minutes, look at visually how I articulate this point. So the result of the business is reflected in financial statement. Who says financial statements are right? The board will say numbers are right. Now the fact that the board say numbers are right, that's called assertion. Look up the dictionary now. The assert means declare something to be true that may not be right. So the revenue 100 million, maybe it is actually 80 million. How it became 100 million? By manipulating the period, the cutoff error. Right? Error or omission. Not omission, intentional misstatement. So, management always assert my revenue is complete, accurate, recorded in the right period, cutoff. So, an auditor's role is to give an assurance. But from risk perspective, now I am giving you 4 scenarios. One was already explained. Look at carefully. Right here, there is a revenue drop significantly because of the economic crisis. This company is not doing well because obviously most businesses were affected. And they have closed down, look at number 1 in the diagram, one line of business. While business is slow down, lot of targets are given, the management is, people are also under pressure to achieve their targets. And let us say they have a business of manufacturing, distribution and inventories are not moving. Now I want you to think these four are business risk. But if you apply assertions, when preparing financial statement that there is a pressure my revenue target has not achieved and that people are trying to achieve their targets, this create ROM, risk of misstatement. Now you see, ideally, if revenue has come down, the revenue should really come down. But management wants to achieve that expected revenue of 100 million. So inventory should be written off, but they don't write off because they want to maintain that profitability. So now I want you to carefully look at this diagram. I am connecting that on the right side the revenue drop. So they are not accepting revenue drop. They are bringing revenue from the next financial year. April sales is recorded in March, cut off. Although the business line is closed down, ideally the machines are not making money. Machine has to be impaired, but they haven't impaired. The target pressure means the fraud risk. So fraud is a big topic in your syllabus. And that inventory slow moving, meaning inventory to be written off, not written off. Now you see, because of the business risk, I am explaining to you in maybe this video is about 15 minutes, but you are learning a lot. So this is that in the table that you watch, that last learning outcome where you evaluate how business risk is going to result in financial statement. Now when company knows that my revenue is going to be affected, inventory valuation is going to be affected if I am not making provision. There has to be a protection to financial statement. That whole protection is about what? Control. In other words, I can probably say that there is an inherent risk that my revenue may be overstated, PV may be overstated in the context of a crisis. Then what protect your numbers? And that is internal controls, right? So then internal control is the next bigger one. You can now also see the arrows for the point that I explained to you. Product discontinuation to PP impairment, target pressure to fraud risk, revenue drop to cutoff, and then inventory slow moving affecting inventory valuation. And this process is risk assessment. And then the point that I made subsequently, what protect numbers is about internal control. Where is your impairment review? That's a control. For fraud risk, who authorizes journal entries? Where are the segregation of duties? Revenue cutoff, is there a reconciliation with delivery and invoice reporting? Inventory periodical reconciliation and review and physical verification. So these controls are going to be rich part of your syllabus. So in summary, you need to understand how business environment changes, and that is the domain of enterprise risk management. And some of those risks going to affect your assertions, the balance sheet and P&L. Make sure that you have an internal control system. That is the course of framework which is a part of your syllabus. So when you connect both the risk assessment and internal control, that is largely a bigger part of your syllabus, that 20% covering risk of misstatement. So another question that you may want to ask, what happened to open book? Open books are still there. But of course, study text is not an open book. You can still refer to Code of Ethics, Corporate Governance Code, but what happened to that big auditing standard book? So that is no longer open book. But you will wonder now, are we supposed to memorize? No. So then CA is working on a more flexible arrangement. Now, most likely you will get another referential book that contains the relevant chapters in the study text. So basically, if you go through, the study text remains critical. So when you start studying, make sure that you really, not to memorize study text, understand the content and you are able to apply them. So these chapters that you can see, chapter 21 to 25, covering both all the areas, non-financial reporting, governance, and then ethics. So especially 25%, sorry, I said earlier 20, it's 25% on this subject that I now spoke. Actually, chapter 26 is what I was trying to cover in the previous slide. 26, 29 predominantly, right? So those are critical areas. So these 9 chapters remain very important. So what should we do now? So you can actually learn this subject like a story. But I invite you, don't separate. There is a consolidation, accounting standard, and audit part. That is no longer the case now. With this revision, take SL1 or ABR as one subject. Learn holistically, and it will help you not only to pass the exam, but to be a distinguished chartered accountant who can talk beyond numbers, who can connect the strategy, performance, governance with financial reporting. So another thing I want to highlight, the way that you will learn through this course is, like I said, our mind. I always talk about story. So your brain is brilliant. You must know that. So there is, left and right, we call logical left and magical right. So your right part is about creativity. Like you like music, you like to listen to story. So learn all of this like a story. But if you are able to draw from many of these stories, you can logically use that storyline to build an answer in the exam. So you will see while you watch videos this. So the last thing to say that the uniqueness in this approach while you take this course is that high power storyline for each main areas. And I mean, you can always assume while you are watching the video, you are in a classroom, take your book and draw it, paste it. So a lot of drawings, and that's where you really talk to your brain and your mind, and you are really learning. So the second point is that why are you now in this new era of learning, are you waiting until lecturer comes and schedule join the meeting? No. Eliminate lecture dependency. Trust the credibility of the course. You don't need to wait for me. Anytime you can watch. If you have question, ask. If you ask a live session, we can do that. But remember, the best way to save the time is to discover the time available for you to watch. But remember, most studies shows that students start actually studying during the last month, and that is the very reason more than 50% in any subject fail, right? Usually. And actual failure rate is much higher. So if you systematically study, it becomes so easy. So always finish the syllabus as early as possible, say in 3 months. And after that, all about you doing work, you answering questions. So you don't need to depend on lecturers. And extremely important to make sure you are covering the study text. So when you learn this course, when you watch these videos, one thing I will tell you, the study text is automatically 100% covered. Without reading, you are reading. You see how it happens. When you actually watch, you will get to see. And finally, the smartest approach I already covered. If you finish the syllabus in 2-3 months and spend the rest of the time you playing with you, where you write your answers and build your confidence. And if you follow this, there is no doubt that in 2023, you will complete chartered, and I wish you to achieve that dream. Thank you.